The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil CHapman.
Hi everyone, Basil CHapman, Tiger Technicians Hour. This is the Friday edition, Friday, October the 18th. And, time is just zipping by. Actually, it's a fascinating thing. I'm sure there have been studies about it. The older you get, the quicker time seems to move. And the funny thing is, people I know who are retired say they've never been busier. I wonder how that works. Anyway, so let's get into this whole nitty-gritty. Thanks, guys. This is Tom and Daryl and Steve for 2 great hours from 9 o'clock till 11. Fridays, we have that special program with Tom and Daryl together. Really fascinating. The diagnostic trading hour is what Daryl does at 1 o'clock. So we've got programming, just right through the day. We've got from 9 o'clock live. I'm on 11 o'clock till 12 Eastern time. As you know, that's why you're listening, probably, unless you by accident. If you're by accident, have a look at this. If you're looking at the Tiger TV, you can go to the front page of TFNN, and you'll see three icons. They just click one of those, whatever mobile device you're using, it'll just pick it up immediately. It's just fabulous when I'm on the road or anything. I'm always checking it out. It's just terrific. Of course, you can always just plug in with your car. You might have it already connected. It's just fabulous. Now, you look at my charts right now. I'm showing the and this is going to be really interesting because I've got a letter change. There's a whole segment in my CD introducing the Chapman wave methodology, where I put in the alternate count, it's called, and that alternate wave count was renaming of the peaks and troughs. Chapter 10, slide 242. I want to get a little bit into it today. This is Technical Friday. On Friday, we do a little bit more work on the Chapman wave as opposed to during the week I do it quite quickly. I talk about the Chapman wave. On Friday, we can get into your questions about the actual Chapman wave itself, sort of thing that I would cover if I was doing a webinar, which I'm hoping we'll be all set to do one in November, early November. Really looking forward to that. Most of it will be an all-day webinar. Now, most important about the market that we're looking at now, IBM is again weak. The Dow is down 10 at 15,360. A huge comeback yesterday. If ever there was internal strength, it was demonstrated yesterday. If you had to go back 10 years ago and way back, even more than that, back in the 80s, I remember I can tell you some funny things about stories of options and IBM and stuff, but forget about that. Let's just go back and say, whenever IBM got hit, the entire market just got lambasted. Bam! Things came down. Look what happened yesterday. Dow was down over 140 points, comes back to plus and then changes down a little bit. Go on. The S&P was stellar. We're going to go through all that stuff in a moment. Most importantly, I want to talk about alternate wave counts. I'm going to do that a little later on. We've got callers already waiting. Let me just get to the nitty-gritties. And the nitty-gritties are that the Dow is the Dow is down 13 at 15,357. The S&P is up 5 at 1738. Oh, I'm going to talk about that. For anyone who trades the UVXY, which we had done very successfully, not as successfully as it would have been if we took profits exactly on that Wednesday low, Wednesday a week ago, but it was still pretty darn good. That UVXY, which is 200% long the VIX index, for people who have traded, you'll notice that yesterday there were moments when the Dow was coming back, but it would only come back about 10 points above where it had stopped. And every time it started to come back, this UVXY just went lower and lower. It was intense, the kind of selling pressure. And even today, the Dow is down only 9 points. The S&P is up 5. And yet this UVXY is down $1.40, down 5.5%. I have to tell you, these are unbelievable vehicles for trading, but you've got to trade them right. Otherwise, you have not just your head handed to you, but the entire body. So let's get back to the questions in the den. We're going to go through that peaky about all the different peaks. I want to do this because I love to be as conservative as possible in my waveform. And this is what computers don't do. And I've done it and done it extremely successfully because I'm the creator of the waveform. It doesn't mean give me the right, but it gives me the flexibility to understand where the variations are. And if you don't know about variations, you are doomed to get so insistent, dogmatic, that you will not be able to have the flex, that rubber band. If you don't have that rubber band elasticity to be able to deal with the market, you can get very badly hurt. I'll talk about that in a moment. It's better to be cautious and incorrect, but keeping within the boundaries so that even being cautious when it corrects, there's no harm done at all, than to be stubbornly incorrect and wait for something to happen that won't happen. I'll get into that. So we've got silver. Gold is down, just a little bit, down 7 after a fabulous move yesterday. Silver's down 7 cents. You've got platinum up $1.75. You've got high-grade copper back in the 330 level. Crude oil stuck in that 101 area. And now you've got bonds only up a penny. Yesterday was a great day for bonds. Dollar is down 9 cents, and the euro is up. I'll talk about those in a moment. I do want to go to our first caller. I don't want to keep him waiting too long. Dan in North Reading, Mass. I know that your time is precious. Dan, what do you have for me?
I was wondering if you could take a look at Spain, EWP. I don't have a position yet, but it's had quite the stellar run, and technicals look good on all 3 time frames. So
I would like to talk about this because all of a sudden it is incredible about the media. I really must get in touch with some people who do a lot of headline news work. I need to get some charts done. I really do. If anyone recalls about Spain, anybody listen to the news at all? Anybody? Could you please tell me, have you heard the word Spain mentioned lately?
Disappeared.
Just right off the news. And that's, if people don't understand, I talk to my friends, lay people about media all the time. I tell them, please, 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 listen to the news, divided by, if anybody... Raise your hands. Anyone here who's ever been interviewed and then seen the quote in the newspaper? I don't care whether it's your local newspaper. I don't care where it is. And you tell me, did it represent exactly what your thinking was? Did you feel you were articulate? And do you feel that the person reporting was reporting your objective or their objective? And I guarantee you a majority of the time, I'm not going to say every time, I would say almost every time, maybe about, well, there are occasions when it's not done, but I'd say about 98% of the time, you can go back and you will see. I know from medical reports, I talk to my wife about this all the time. I say, hey, I'm going to read you something. What do you think? And you say, hey, that's not news. We've known about this all the time. Or she'll say, hey, that's not very accurate, or that's just very superficial. And then you go to anybody who's a master of their field and ask them about anything that's been reported anywhere. I don't care if it's the New York Times. I don't care whether it's your local Newton Tab or whatever it is. You tell me when the quote has been exactly right. So I always say divide by half, and then for safety's sake, divide by at least another third. And that's probably half the truth. How many stories have been reported? Now, look at that whole thing with the guy that Tynev, who was captured here in Boston from the Boston bombing. Everyone's making big heroes. It was absolutely accidental. They would never have found the guy. They'd still be looking for him until the guy went out to find his boat. It was just absolutely accidental. And then they made out like everybody was heroes. Accidental things. Serendipity plays a huge part. Hey, you asked me about the EWP. You can see how I can get off on a tangent here quite quickly when it comes to things. But I wanted to do that because why? Spain was headline news. Greece. Anybody? Only thing that's been reported about Greece lately is most probably something about to do with food or something nice. So, but you haven't heard anything bad about Greece for a while. So I'm going to, I actually used this time because I wanted to do the charts while we were talking, and I managed to do the charts. I had these all notated. I'm going to actually grumble a little bit because I haven't heard from TradeStation as to exactly what's going on about the latest iteration, so I will get to them over the weekend. Hopefully they resolve the problem, and it's just mine. I haven't heard too many people now who's had the same problem as me of losing those charts, but they are still being lost, and now I've managed to update everything about the EWP. Now, EWP is not the index of Spain. It is merely EF. It is merely an ETF built around stocks on the Spanish market. And just want to double check 3130. There it goes, 3134. That's an A. You must not miss a peak. That's your only obligation in the Chapman wave. Now, I'm going to do this real quickly in terms of a scan. When you said to me, looking at it, all the charts seem to be very good in all the time frames. There is nobody that could disagree with you. Why? Because from the low that was made around, let's just talk about the most recent low. We'll talk about the one in June of 2013. That's June, the week of the 28th. The EWP has gone from 2750. Let me just type that in. 27. Now, what I was grumbling is that I had every single one of these ETFs all notated, done very nicely. Oops, I did that a little quickly there. Yes. So from the lowest, most recent low of 2750, it's gone almost straight up to a leg D at 38.49. That's the high. As we're speaking right now, it's making a recovery high, but it isn't just a recovery high. It is a 2.5-year recovery high, because the last time it was at this level was on that spike up in October of 2011, exactly 2 years ago, when it hit 38.25 before plummeting down to 1973. That was the low. So now let me ask you, do you have a position? Is this something you're looking at because you'd like to buy it, or what's the story?
Yeah, I don't have a position, but I was thinking of initiating one, but just kind of wondering if I'm a little late to the party here,
Okay, just in real simple terms, I'm going to say, if you're looking at something that's gone almost straight up with no more than 1 to 3 days within the buy mode for the consolidations, you're absolutely looking. I'm going to talk about this in the coming little segment that I have straight after you're done. So keep listening. I'm going to say absolutely you're a little late not a little late. Let me be polite. You are very late to the party. Just in terms of risk reward. But if the patterns that we've been looking at over and over and over again that have gone to the cup formation, even, I'm just going to jump to this, even a GE has got a kind of a cup or a V-shaped formation. All these stocks that have got lambasted and all these ETFs, well, they are in fact looking like they want to climb to the last left side resistance of consequence. So let's talk about that, because it's very important that we look at it in the whole context. I'll be right back. Hold tight, Dan.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil CHapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, Basil CHapman. As many of you know, my methodology entails looking for the most identifiable lowest low bar and merely counting each successively higher peak. The objective is to get you at least 4 higher peaks. That's A, B, C to D. And in fact, as I'm talking now, I'm doing a whole bunch. I'm redoing many of the ETFs, the EWs. That's the iShares of the different countries, ETFs. I'll probably be able to find it somewhere, but I haven't got it right now. And most importantly, what I'm looking at is that so many today are going to a leg D or an E, and we're going back to the EWP, which is, in fact, Spain. And Spain is going to a leg E in the daily. It is leg D in the weekly. It is leg C in the monthly. And that says to me that after a consolidation at some point to make a peak C, there will be a leg D. And that leg D, I don't know yet whether it can go. It's a 38.48 right now, whether it can go all the way to 45.99. But absolutely, the chart formation says from the squash that I've got in the weekly as well as the daily, which has already completed its up move, at least it's almost like a 1-to-1 to the upside. I must tell you that in terms of looking out further, I always have to go back to saying that back in 2010, beginning I think was January, my wife and I made a decision about grandchildren to put some money into a fund. And I said, this is the exact top. The day I'm doing it, I know it's the top, but I'm prepared to do that because looking out, I'm still very, very positive. And it turns out that was, I never look at it. I don't even remember what the funds were at the time. And that's a way of looking. One way of investing is to buy and hold. And in this market, when I go back, how many times have my subscribers and I, we've had GE, and we take a little bit, we lose a little bit, and we had it at 16, and the darn thing has just kept going, and today it hit 25 something. So to mess around is one thing, but in a mega bull market, when the Fed has said we are determined to get people into the stock market, it seems to me that there are two attitudes, and I don't think this is the attitude that you really want to have, but I'm giving it to you as an option, that the EWP is vulnerable at this point at 38.47 to a 10% correction at some point fairly soon, I'm suspecting. 34.93, the major 200-period moving average at 33.91 doesn't even have to be hit, but 37.24 is the 9-period exponential moving average, and that seems to me an absolute certainty to be touched in the next week or so. But here's what I'm thinking. As far as looking out is concerned, the EWP bought at 38 with a 10, even a 12% risk, says that it could move up at some point towards the 42, 43, and maybe even go to the 45s where the left side high is. Well, that is a nice risk reward. If you're only talking about going up to 39.5 or 41, 10% up, 10% down, or even less than that on the way up, I wouldn't even want to touch this. So here's my thinking. Long term, if one was trying to build a portfolio now, this is one of those that got so badly hit, seems to be coming back. And the dent was mentioned, 25% jobless. I have to tell you something. I haven't been to Spain for a little while, but we had gone maybe twice within 3 years, and maybe 2007 or 8. I don't remember what it was. No, it must have been 2011, I think. And there were people. The shops were roaring. Everybody seemed to be working. There's an underground economy. I don't know what it is. I don't think that those are the exact figures. Things are actually look very good. Even then, it was supposed to be over 20%. So I can't really go with that. It's like reporting the news. I just can't go with that. It's an inaccurate number. So I think there's a recovery going on. So here's what I'm going to say to you. Keep it in mind. There are other ETFs that of country funds that I've gone through that might be not quite as extended, but also have very good charts. But if you're interested in looking at this now, I don't think I would short the EWP. Now, let me put it differently. If I was a swing trader, I would consider in the next couple of days shorting it for a quick slide. But that's all. I would rather say to you, have patience. Keep it on your radar. It is overextended to the point where I can see it going up maybe another 1.5. Could be wrong about that, but not much more than 1.5. But I absolutely see that it could come down 2 to 3 points over a period of a couple of weeks. Have patience. Call me again when you see this thing it's at 38.48. Is between 36.50 and 36, and then we'll have a look and say, hey, is this the time on the weekly chart to add it for a longer term position? I hope that helped you, Dan, and I know that you can't always stay online, but I hope that helps you. So I just wanted to go through that. We'll be back with Garrow straight off this. The Dow is down 7, S&P's up 6.
Wednesday, October 30th at 6:30 p.m., Andy Hecht has a special live online workshop for his subscribers to his weekly newsletter, The Technomental Commodity Report, called A Roadmap That All Investors Should Use, But Most Don't. During this hour-long live webinar, Andy will teach you how to use free and readily available market data to calculate the future expected price range for any asset. It's a simple yet powerful method that every investor should have in their toolbox. The best part is that you can attend this live online workshop, which will be archived, by simply signing up for a 30-day free trial to Andy's newsletter, the Technomental Commodity Report. And this is the last month to lock in the low introductory rate of only $39 a month. This price will be going up by over 25% come November, so now is the perfect time to get in on the action. Sign up for your 30-day free trial to the Technomental Commodity Report today by visiting the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. We're back, and the Dow is down only 3 now. S&P's up 6.43. We're going straight to Garrow in Newport Beach, California. Hi, Garrow. How are you?
Very good. And you, sir?
I'm well, and I bet the weather today is the same as we're here in Boston. Low 60 degree, maybe 50-something degrees. Is that right?
Here?
Yes.
No, here in California is now about 70, 75.
Oh, isn't that nice?
Yeah, here it is warm or warmer. It never rains.
I know.
Either warmer or warmer. That's how it is. Yeah.
Well, that's good. So you wanted to look at V, which is Visa Inc., right?
Yes, sir. Yes, sir. Yes, sir.
Trading at 199.49, and in fact, for folks now, don't forget looking at your charts. Go to Tiger TV right now. This is what you want to see. There are patterns here that are fabulous patterns. These are the trading patterns you want to look at. V is for Visa. V is for V-shaped recovery from the round number 198 high of the 18th of September. The next day it goes up to 200.86 and reverses below the 198. And what does it do? It slides all the way down to 170. What was that? 180.11, and that was on the 9th of October, and whoosh, it comes right back in that V-shaped pattern. So you are long, right?
Yes, sir. I bought it on October the 16th for 194.30. I bought it on a 60-minute chart, which the first candle hit the first dot on.
Yes.
I bought it there. It was 9 in the morning. Still, I have it. I have 200 shares. Here, I can see that on a different chart is $199.53. It has a resistance. It has and the next resistance is $200.78. It's getting it crossed that. It crossed that resistance at this time is 199.66. My question is that I'm getting too greedy now. Usually I don't hold the stock that long. Usually when it gives me $2-3, I get out. Should I get out or should I wait for $200.78?
Gara, our only question right now is there are two things that are happening. When I spoke to you last, I said, I'm going to introduce you to a concept that is a little different to your usual trading style, and I don't want to change your trading style. I want to just add a little bit of finessing to it, and it's going to be a very easy thing to do. And I just want to finish this chart: 95, 72, 78, 95, 81. Oh, that's amazing how that works. That's kept to go. Yes. I've got it in an alternate count in the 120-minute as leg F. MACD is really good. Stochastic is at 96% in the 120-minute chart. 197.43 is, in fact, the 9-period exponential moving average support. Now, let me just go through the thinking. Your thinking was that normally you get a few points, you are out of it. And I said to you, how about doing something a little bit different? You can do that, get out of whatever it is, on paper say, but I am holding back a third or a half or 25 shares, whatever it is, just a little portion that you're going to hold back. And that's going to have a trading stop. And I'm going to try to see, because I've managed successfully to get a momentum play to the upside, why not, if it's gone higher than my usual stop-out point, why not make the stop-out point either where it was, but hold a little extra position, whether it's on paper or in real life, and have that as a trading stop? And you say, I'm going to give it a 1-point trading stop or a 1.5, or whatever it is, depends on the price of the stock. I'd say, in your case, a 1% trading stop or a 1.5% is fine. And that says to you, I'm now learning how to maybe add to my position. That's number one. That's add to the gain in my position. And at worst, I'll get stopped out at what I was going to take off originally. There's another way to do it. It's the second position that you're holding. You give it a little bit wider stop so that that one does get stopped out lower than normal that you would have got, but it also has the added incentive that if it goes up, you keep that trading stop. So that's the concept that we were talking about. And I think you applied it. You've already applied it once, right?
Absolutely. Yes, sir. Yes, sir.
Okay. So now the idea is you've boldly taken the concept and you've stepped into a completely different scenario. And the scenario says, I would have got out. I haven't got out. It is working. I'm above the level I would have got out before. So the question to you now is, where is your stop?
Right. Yes, sir. Absolutely. Yeah.
So the stop has to be no more or no less at this particular moment on part of your position at your original stop out point, which you didn't take. because you don't want to go back. You don't want to change your methodology. You want to add to the methodology in a subtle way. That's number one. Number two is I've got Visa as going to make a leg D at $2,200.87, 1 penny above the high of the 23rd.
Yes.
So my thinking here is it's acting beautifully on a day like this. That's what you want to see. The weekly chart has made a cup formation with a very big cup, and it's almost like a ladle. Like a handle pattern. But it's the monthly that it looks absolutely phenomenal. But you are a swing trader, but not a swing trader. You are a points or a percentage player. And there's a whole bunch of different, right? Isn't that so? That's what you like, your points and you're out. You don't care if Visa goes to 963. You wanted your 3-4 points and you were out.
Absolutely.
But I'm saying to you, I love the way you choose these things. You've got a fabulous technique to do it. I don't want to modify that in the least. I want to only add to it. Modifying it means that you've changed your whole concept. I don't want to change it. I only want to say, look, it's at 199.58. I'm going to suggest, what was your original stop out point would have been?
Mr. Basil, I don't put a stop. I'm on top of it and I'm watching it. If it doesn't go my way, I just click it and get out.
Okay.
It's funny money when I have the profit in my hand.
You know, it's funny that you say that because I do so many different things through the day with the shows and my newsletter and my own stuff and my trading. I tend to do the same thing. I see a gain and I'm looking at the chart and all sorts of things are happening and I say, I'm out. I just feel happy that I got what I got. I'm out. I'm done.
Yes.
And if I don't do that at that moment, there's a good chance that I'll be giving up some profits. I don't know what it is. It's something that you've built up. You call it instinct, but nobody pops out of the wound knowing when to get out of Visa, right? I mean, it's a developed thing. It's right. Not instinctual. It's in the back of your head. You just haven't notated everything. So I'm going to recommend that this is the position that you've made a little change in your position. Normally you would have got out at about 3 points. At about a point ago, you would have normally been out, right?
Yes, it's over. Yeah, it passed that point.
Yeah. So now I'm saying to you, I'm going to recommend that instinctive, fine, use your instincts, but I'm going to suggest that whatever you do, the stop that you normally had, if you haven't gotten out before then, that's what you need to do. So at 198.50 or whatever it is, if it gets there, you're out. That's number one. Number two, and this is the exciting thing, is that you could say to yourself, even today, you could say, I don't want to hold it over the weekend. I'm out. But I'm going to suggest holding 20 shares as an experiment. It doesn't have to be 20. You know what I'm saying? Just a very small, because this is part of the experiment. And the experiment says, I want to see if it goes 1 penny over 200.86 before it hits my stop of 198 or whatever it is on this little portion that you're going to keep. And if it does that, then you can say, great, now it's in leg D. You can exit at any point because you still are going to treat yourself as a points trader. And then we can go to another step if you call and that's successful and see if we can add another little nuance. That's all they are. They're nuances to your trading. Does that make sense?
Yes, but I have to get familiar with that method. You see, the 25 shares. I don't know.
I know what you're saying. I know you don't even want to mess around with the 25 cents. You want your big block. You're in and you're out. I'm saying that this is it's an inexpensive way to add to your system, so that you have the tenacity to say, you know what, I want to go for. And in my case, I would go for $200.87, and then I'd immediately raise the stop as tight as anything, get taken out. But you understand what I'm saying? That we just, it's a slight nuance. But the whole idea here is that you absolutely you do not get taken out lower than your original stop would have been, the instinct that would have got you out at about 3 points profit. That you don't want to give up. You don't want to 2 points profit after all this. That you cannot do. You've got to be adding to the gain. And it'll be only just You know, you could even do it on paper at any point today or Monday. If you say, I'm out, you're out. And then on paper say, but I'm pretending that I'm holding 25 or 100 shares. And I'm going to see if I can hold it to 200.87. That's all. How about that?
All right.
First of all, congratulations. Secondly, Visa looks fabulous, and the monthly chart says it's going to go even higher, and the weekly chart says that if Visa is able to take out 202, maybe 203 next week, it makes the weekly chart even stronger. If it fails next week in leg D in the daily, then I'm anticipating a pullback, a very quick pullback at 194 to 192. So that's the way I'm looking at it. But you've got a good eye, and congratulations. I don't want to change your thinking at all. I just want to modify a little bit so that you can increase the gains that you keep taking on these point moves. That's all. Hey, yes, Garo, congratulations. Have a great weekend. Thank you so much for calling.
You too, sir. Thank you. I appreciate it. Thank you. Bye-bye.
Thank you very much. It's Gary in Newport Beach, and we were looking at Visa trading at 199.55 up to $1.27. He has a lovely take. You know, folks, this is whenever I've given talks to wherever I give a talk, but especially to the Boston Investors group here in the Boston area, of course, over at Cambridge, Mass, when we meet. I always say to them, your instincts are very good. Don't really change your instincts, because you'll be surprised when when the whole media and everything was so depressed and everything back in 2009 March, when I got that fantastic buy signal the very day of the low at, I think it was 66.55 or so, I don't remember, on the diamonds. 66, oh my God, the diamonds are trading at 153. Okay, so I remember talking to them and I say, you know, if you see a stock that you've been looking at for ages and you say to yourself, I have wanted that stock for so long, I don't care where it's going to on the downside, but this is the price that I feel happy with, buy it and then put in a stop or whatever you usually do. But in the meantime, if you are listening to the news and you're just so, for instance, we're going to go into a phase at a certain point where the media is going to be talking about the stock market as the only place to be. They haven't done it yet. We are going to go into a phase that says the stock market is the only place to be. The stock market is the only place to, are you in the stock market? Are you in all those, remember 2000? Remember the grandmothers that were talking about buying Yahoo and all those stocks, Amazon? Was Yahoo even around? Well, whatever stocks were around at that point. I've got my mug. I must find them a mug with all this. Akamai. That's what we're going to go back to. I'm absolutely sure about that. And that is going to be the tip-off to say, market, real estate, whatever it is, take it easy. Okay, now let's go back to the story I was talking about. Let's go to the Qs. 1, 2, 3. QQQ Trust Series. What do I hate? And I really mean I hate to see it. I hate to see a gap up on news on a Friday to a possible leg F. Now, this could be a brand new leg A, but if it's a leg F, I don't see how it could be at 95% in the stochastic and the MACD turning up so strongly. But just imagine this gap up. Over the weekend, there's something that happens, and on Monday we come in, there's a big gap down. You've got a little island reversal here on the Qs if that takes place. So, and in the weekly chart, it's broken. It is just breaking right now. Major, long-term, from back in October of 2012, from that low of 61.31. This is a trend line resistance that is just taking out today. And it's leg E up with a big breakout in the monthly. I have to say the monthly shares look great. Technicals look great. The weekly technicals look great. I'm just a little nervous on the short term with the big gap up here. So I'm going to talk about it. I'm going to talk about the alternate wave counts, etc. And yeah, that's what I'll do. So stay tuned. I'll be right back. Dow's down 5, S&P's up 6.
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position subscribers sold recently for a 42% on parts plus a 64% on rest. And Hertz Global as a core position for 6 months before exiting the position. A current position entered as a turnaround company with good technicals based on Basil's waveform is trading up to 170% of its entry point as a portion sold earlier for a 21% gain. Subscribers to the opening call can see the Chapman wave techniques demonstrated and explained daily to educate investors. To get your 2-week free trial to the opening call, just visit the front page of TFNN.com. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday at 11 a.m. Eastern on TFNN.
TFNN has just announced a special sale for 2 weeks only for the Gold Report. To celebrate the 600th weekly issue of Tom O'Brien's Gold Report being published on October 22nd, TFNN is having a special one-time sale. From now until October 22nd only, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, which is almost half off the regular monthly price. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Take advantage of this one-time special offer and pay only $600 for 60 weeks of the Gold Report. This offer is valid for current or new subscribers. Everyone is welcome to take part in this special promotion as we celebrate the 600th weekly issue of the Gold Report. All the details are on the front page of TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Learn about good health and fitness. Living a primal lifestyle with Nico and Paige. Next on TFNN.
Hi, folks. Just real quickly. So here we go. Questions. So I got an email just a moment ago. It says Spain FT reported earlier this week auto sales started. Auto sales EU zone up 5.4% just in September alone. Auto sales started to go up in Spain and Portugal. Thank you so much for that. George, I appreciate that. Okay, that's number one. Number two is, in the den, I was asked about Caterpillar. Caterpillar making a beautiful U-shaped formation. This is, for the very first time, there's a pattern that I talk about very often. It is the H to a consistent M pattern. If there is a break in Caterpillar, a close, not a break, it has to be a close in this particular instance, above the 90.69 high of May of this year, May the 5th, it's at 87.56. At any point, that is going to be a huge positive for a number of things. It is Caterpillar and DuPont on my the guest artist for my Dow Quartet, GE, IBM, GE spectacular today, GE, IBM, Triple M, and UTX. UTX is my pilot light indicator. So that's that. When I have guest artists, when the group gets together on a Friday night to jam, they invite Caterpillar and DuPont sometimes. So we'll be looking at those. They're very important stocks for me. Now, here's the other thing. IWM, I was asked about in the different time frames. The daily gap up to a possible F. It could be B. I just don't know. Normally, I don't see peak Fs when the stochastic is at 93%. That's normally a sense that it's a little overbought. You can pull back, maybe fill the gap a little bit, but then you should go on to a C and a D. But most importantly, the support at it's a 110.09, up 64 cents. The IWM Russell iShares 2000. If that drops next week below 108.02 to 107.48 to key support levels, that says, be careful now. You could be starting some kind of a pullback. Leg D is the alternate wave count that I use. Remember, I thought that was a peak E and a more serious top that we made the week of the 9th of August. And we did pull back very sharply. There was the ugly week. And then, boom, turns around and it recycles. There's a whole thing that I teach in my Master Trader series. Why does the E also have a notation of A? When does that A become a legitimate A and the E gets negated, or when is E very important? And a lot has to do with the pullback in the technicals, with the price holding way above the previous low. In this case, the low of the 28th of June, week of the 28th, with a 93.83 low and a 97 round number close. So this is leg D. Leg E in the weekly, in the monthly chart. So leg D in the weekly. F/B in the daily, D in the weekly, E in the monthly. Now let's go to the next thing that I was asked about. This was an email. The IYC. Same thing. Popping up today. Is this E, or is this a leftover E from the previous peak, or is it a brand new B? Well, we don't know, and we don't have to decide. Well, the beautiful thing about this methodology is that within the methodology itself, you have an alternate count every once in a while. But as long as your technical factors are there, you actually don't have to make a life-threatening decision. You just say, okay, in other words, if 112.72 to up 28 cents and the IYC, the iShares, the Dow Jones U.S. Consumer Cyclical Sector Trust, if there is a break, doesn't even have to be a close, but a break underneath 111.20, it's a warning, because if it goes under 110.50 next week, that's an E, and you're coming down and using up time. Maybe test that gap area below 109. But if it holds very nicely, holds 111.20, the 9-period moving average, if it holds 112.20 and then goes to another new high, that's brand new leg C. So I hope I answered some of those questions, folks. When you get my opening call, a lot of this is discussed in the opening call. Each time we're looking at whatever charts. We just added a stock yesterday. It's acting very well. We're adding to the long side. We missed a couple that we wanted to get. No big deal. There are plenty of stocks. I'm looking for a bit of a consolidation here. That's what I said about today's action. Just kind of a breather between the different sectors. I'll be back on Monday. Have a great
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.